Thank you, Johnny Watchman. Hello, everyone. I'm David, and this is Moonlit Markets. Tonight, we're going to be talking about getting trapped. Now, there's more than one way to get trapped as a trader. One way that you probably are thinking of and probably already know is like FOMOing into a top and price reversing against you and taking a big fat dump. You got trapped in the trade, and one of the ways that happens is you lose focus. You lose focus, you let emotions take control of you, and you enter that trade that you know you shouldn't have. Another way to get trapped is, how am I going to put this? So let's just back up. Let's go back to last week. So I was at work and I was watching this seminar, or listening to while I was at work, on YouTube, on a channel called the Institute of Trading, because I try to learn something new about trading every single day. For the last 3 years. It'll be 3 years next month. So, I watched this seminar, and they went over how brokerages, like these prop firms, how they're basically predators for retail investors. And how there's a circle that they have created, a business model, where they get money from institutional banks so that they can do their business, and then they go and they hire, notice how I'm using the quotes, online educators that trade on their platform and always have a great track record. The brokerage recommends them, and in order for you to get on the brokerage or whatever, one way to get on the brokerage is to go through an affiliate program as a retail trader. So you find this educational content, and then they lure you in, get you on the brokerage, get you in the prop firm, and then eat away at your account through fees, through spread, through something, I forget what it was called. It was called OTC something. The OTC something. I don't know, but I will have to share that video with you guys. It's like a 2-hour seminar. I think it's worth it. But in that, it started making me think about like how, because they talked a lot about, how these educators have contracts with these institutions or with these brokerages. They're called IB contracts. If somebody says they're a professional trader, ask them for their IB contract. If they don't have one, they're probably not a professional trader, by definition. So this is where some people might say, well, David, that is Wall Street, big money, keeping retail from being able to trade. And that is true. And I lost focus of that. And it made me make a poor decision on Sunday. So leading up to Sunday, I was debating on whether or not I even wanted to, I was debating if I wanted to provide setups anymore. I was debating if I wanted to even provide, what do you call it? Like the percentages, like your wins and losses and all that. Just because, I don't know. Well, I didn't. I took away the win column on my Discord. In my Discord, I took away the win channel, where people throw in their gains. I took it away because I thought, all right, we're just going to start showing losses. That's how, like, this seminar made me start thinking. Because I was like, okay, I'm just going to do losses. That way, because I got messaged from a member talking about how, they didn't want to share their trade, that they lost because everybody else was throwing in all their wins and just, showing off their wins. And these educational traders like to trick people by going long and short on a trade, but only showing you the win, not showing you the loss. In other words, they're basically frauds. And I just didn't want that. I didn't want that at all. I didn't want the person that messaged me to feel secluded, to feel embarrassed. I wanted them to feel like it was a safe place for them to come and talk their trading. And in response to that, I ended up handling that not in a proper manner. To be honest, I didn't handle that situation properly. Before I go further, I will say that I did end up showing that person like 9 or 10 of my recent losses, just to kind of show them I take losses too. Like, everybody takes losses. Everybody. So, with that said, oh, did I bore you, Johnny Watchman? Sorry, dude. I gotta get this out. So, moving forward to yesterday, I had a chat with a really good friend that many of you will know. His name is Alex O Crypto. Otter Gang, what's up? Yeah, I ended up having a really good chat with Alex yesterday, and he made me see, he made me look at things differently. He really returned me back to who I was when I started helping other people. Because, I was like, what do you, because I just wanted to ask him, because this had been like eating at me ever since my last swim, because I went on a curse word laced rant, because I was just so pissed off from what I had heard in that seminar and how these brokerages and these educators, basically prey on retail investors. So, who of which lose most of their account or their entire account within 90 days of being on the prop firm. So, I had a chat with Alex, And, I was like, this has been eating me up. I don't know if I should share my wins. And he said something along the lines of, sharing your wins can, he saw the way that, where I was coming from, but then he gave me an opposing viewpoint, which was showing your wins also can help inspire others and show them that they can do it too. And that really got me thinking. And man, I love that guy. That really got me thinking about this whole thing. So, I'm trying to think of what else of that conversation that I can share that would be of benefit. But the main thing is moving forward because of the conversation that I had with Alex. I am going to start showing my trades, both my wins and my losses. But I will not show my dollar amount. I'm real sketch about showing my personal money. If you lived where I live, you would understand. I don't live in Canada, okay? I heard they don't even keep their front doors locked. All right? But anyway, whether I had $50,000 or $500, it doesn't matter. I know that there's ways that people can track your wallet or figure out which wallet is yours just by seeing your portfolio. So, why run the risk? Maybe one day I'll have a compound and I'll have, I don't know. The point is, I'm going to get back to doing TA. Well, I've always done TA, but doing it the right way. Sharing my ideas, sharing my thoughts, sharing my, my process. We're going to, next week, we are going to go over a system. We're going to build a system. Like a daily routine that, I've spoken about this already, but, daily routine or weekly or monthly, but a routine that you will use consistently. So if you want to take it to the next level in your trading. But yeah, so, I apologize for, letting my emotions get the best of me on Sunday and not really thinking things through completely. But yeah, I just wanted to come out, say that, just let you all know a little bit of what I've been going through for the past, since I guess it's been a week now, what I was going through until yesterday. But yeah, so hopefully, hopefully you guys will let me move forward and you will continue to follow me, and I will love you forever. I already do. I love all my supporters. You guys are amazing. And I couldn't I wouldn't be doing this without you, to be honest. So, as far as the live streaming goes. But, yeah. Well, I think I've gone on long enough. I think it's time we get into the charts before I scare off anybody else. So, one thing that I will never do, for sure, is provide signals. I don't provide signals. Not like... I will have a setup. I'll just show you my trades that I take. That's what I'll do. They're my trades. It's not financial advice. Do not buy, sell, or hold, or anything of the sort because of me. Do your own technical analysis and build your own, system. Build your own strategy. Follow your own strategy. Find your own strategy. You gotta sometimes you gotta go through a lot of different things until something clicks. And every single strategy has to be done like 100 to 200 times. Let's get this big screen off of me. There we go. So, let's, I forgot what I was just saying. Sorry, my nerves are like shot because that was a lot. Maybe I should have done it at the end of the show. God, no, I had to get it out. So, I'm glad I got it out. And yeah. Join the Discord. Thanks. Link is in the description. All right, so let's go ahead and take a look-see at the ye old Bitcoin. We're going to go to Coinbase chart. All right, and what I wanted to do was just a little bit of... So the theme is obviously trapped traders. Let's not get trapped in our emotions. Let's not, try to become holier than thou, acting like our shit don't stink. Like we know all the answers. Yeah. So I wanted to get a little bit into volume. And perhaps you could use that as a strategy. So yesterday we had the FOMC. This is before the FOMC though. This is, what was the first bit of news yesterday? Unemployment change? Something. I don't remember. Doesn't matter. Anyway. So, something I want you to notice right here. So, this is called volume spread analysis. It's VSA indicator. So, we just come up here, type in VSA, and then volume spread for VSA by Harry Prassith G. But yeah, so it's basically a volume indicator. This just shows you increased volume. I wonder, let's take a look. We're going to look at PVSRA and see how close in comparison we can get this. Let's see. All right. So, what is a trapped trader? Usually you can find trapped traders Well, trap traders are always found at tops and at bottoms. So basically, trap traders is retail that sees a big move up or down, and on the way up at the top, they hit that buy button and price reverses against them. At the bottom, they hit that sell button and price just reverses against them. So traders get trapped in trades. Now, in this instance, the trap traders are right here. Why? Well, we do have trap traders down in here too, but not as many. But this one has higher volume than this one. So we had a quick move up. That's important. It must be a manipulative type of move, one with a lot of volume. That's where this indicator comes into play, and this one too. Yeah, so we've got a peak of volume here. So what we can determine from that as price rips away from it is that traders got tripped up, got trapped up here. All right, so what we can do is we can take that wick, pull that down, and then come across. Now, when we see the pullback to take out these equal lows down here, these lows down here, this low right, no, we don't take that low, but we take out this. And this was also a quick move down with high volume. Now the difference though is that the volume fell off, right? Volume fell off. What that means is that we have seller, because we're coming down, exhaustion. The sellers get exhausted. And then we have our trapped traders up here. Traders get exhausted, sellers get exhausted, and price just starts to slowly creep up. We have big money coming in very slowly, bidding the price to the upside. My target, once I see this bottom come in here, and then I see a bounce like that, I would be getting in on the bounce, or once it shifts up and breaks, maybe I jump in there and then just ride it up to where the trapped traders lie, typically above. And then we get above where the trapped traders were, and then consolidate, breakout, volume. We got price coming up, volume down, volume down, comes up out of the range consolidation and breaks down. That is bearish divergence. But do you see how we have two different types of divergences in here? We have a bullish divergence because price is coming down in volumes, but volumes coming down, but that shows seller exhaustion. This one shows buyer exhaustion. There's not enough volume to continue the price higher. So we come down. And then this is where I like to get in. This is where I would come in. We're on the 5 minutes, so we're going to come down to the 1 minute. And I would be looking at the top here. and I would see this fair value gap, and I would short from there, with my target being the lows. That's exactly where we go. Why this low? Volume. Volume's in this candle. Lack of volume. I'm interested. Does it hit that? I don't think it hits that half midway. Oh man, it comes so close. That would be insane. Look at this. Those wicks, man, and their midpoints. So yeah, that's a little bit of volume divergence. Let's see if we can find another one. You do start to see, I'm still on the 1 minute. Let me get off the 1 minute. All right. I just went over that section. So we would have shorted that down to the bottom here. Then we would try to find our next trade. And right now, so right here, again, price coming down. Volume coming down. Seller exhaustion. Price comes up to fair value gap. Short. Come back down to this high volume candle, possibly even lower. But right now, I am just wanting to go over. I want to see how many times we can find this seller exhaustion, price moving down, seller exhaustion, rip to the upside. Comes all the way up to take out buy side liquidity. Up there. End of the move, spike in volume. No big spike there. Could we have caught this move just by volume? Possibly on this one. We did break the white. I forget the significance of that. But we do see a divergence right here. Oh no, this is just by volume. It's not by. My bad. So the red is extreme volume, ultra high volume on the yellow, regular volume green, low volume blue. But we do get a little bit. I don't know how much weight I would have put into this, to be honest. This right here. Price moves up from that low to that candle with the big move right there. So maybe you could ride the wave to the upside on that one. That one's a little bit on the less probable side. So I'm not sure I would take that one. Been learning a lot from you, man. Thanks. No problem, brother. Glad you're here. Thank you for the support. Go ahead and hit that like button if you haven't already. Let me get at least one until the morning time when everybody wakes up and actually watches my stuff. Now we see a move come down here. Volume picked up to push that price down. Then volume again just completely dies on this low here. Now these blue vector candles show that there was increased volume in the move, and a blue is a green candle. So if I turn this off, you'll see that's a green candle. And that just means basically that buyers in this zone, and you do get a little bit of a mound here on your volume. Volume is so important, guys. Like guys that pattern trade, you know, if they're not adding volume to their analysis, that's probably why they're not winning a lot of trades, because volume is very important to your analysis. Volume is everything. Volume is what shows you what smart money is doing, because retail can't make moves like this. Retail is not this. Retail is this blue down here. These are big players. These are even bigger players. These are institutions, probably the red ones. But see how they push price down there, the institutions? And then it comes down, and there's just a little bit of a push up. But we get a high volume candle there that absorbs all the sells that come in right there. Then we push price up. Almost always comes up and takes out the previous consolidation range, which would be, you know, that whole range right there. Actually, yeah, it takes that out, the whole thing. Takes it all out right there. But I would probably, we would come down. Trying to see. It's not really, there's not really a manipulation move in here. Not that I can see anyway. But if I take the low, so we bottom out, and then I would take the high of the consolidation range once we bottom out. So there's my bottom and my high, and then consolidate. Drop out, rip back to the upside. Come back down, get people short again, rip back to the upside. Whoops. 10 minutes. All right. If there's any coins you guys would like for me to look at, throw them in the chat. Let me just go ahead and take a look-see over here. Oh, first let's take a look at Bitcoin, see what we think we're doing with Bitcoin. That's just, I hope you enjoyed the volume lesson. Hopefully you can use that in your trading. Go back test, you know, do your own back testing. If you decide to make a trade using that type of analysis, it's on you. It's not on me. I got, you know, I can't have the government coming after me. Okay? So I got to say things. But I mean it at the same time. Like, I'm just a nobody that's been trading for 3 years next month. So Let's see. Bitcoin. I mean, the first thing I notice is look at all that volume on there. That's FOMC right there. This was the news prior, and then FOMC. And I actually got in on a move at 34,220 right here. Saw it come all the way up here and did not take profit. And I'm so mad I didn't take profit. Came back down, added to my long, and I'm currently sitting in it debating if I want to get out of it while I'm still in profit. Because I do see this, we see the volume coming down. Yeah, that's over the last day and a half, nearly 2 days. Volume coming down, but we do have non-farm payroll tomorrow and unemployment rate. What we want to see is that unemployment rate. Unfortunately, as traders, what we want to see is the unemployment rate go up. Which, if the news earlier in the week is any indication of what we're going to see, then that number should go up. It should either be the forecast at 3.8 or it should go up, which would further supplant the idea that the Fed will stay paused in December. Hopefully, they don't ruin Christmas by raising rates again. Hopefully. All right. And the non-farm payrolls. Now, these are really tricky days. These are days that I don't personally typically trade unless I'm like off work, which I'm not tomorrow. So, because non-farm payroll days are always crazy. So, keep that in mind going into tomorrow. Yeah, just keep that in mind. I don't know why, but non-farm payroll is always something. But I feel like we are on the cusp. We're on the cusp of breaking out one way or the other. It looks like we're reaching for the upside. Now on Coinbase, on the perps, this thing got higher. So that gives me hope that it will go to the upside because we didn't break that high yet. We actually more created equal highs, which love to be taken out. So I would expect for people to think psychologically, man, we got beat down here. We got beat down here. We're just getting rejected hard. I think I need to go short. And maybe it still draws in a little bit lower. Maybe it even comes down to the low ADR. I've been saying 33.7 basically all week. But we haven't gotten it. So maybe we will, finally. We do have these equal lows over here. And this is where the effery could come around. Hopefully, maybe London will go ahead and take care of it. And this thing can get marching up, going into New York. And then New York can sell off, because that's what New York loves to do. New York and London would probably be selling off in the morning at the same time. And then just holding over the weekend. And then opening up Monday. Hold, drop, low, and then pump. Santa rally starts next week. Technically, I think it's already started, but we'll see. We do have a triangle here if we are trading patterns. We did have a successful breakout, but then we came back into it. Then we broke above that and came back down to the apex of the triangle, which is where the 2 points meet. And that is where we currently have, these are, these, I don't know if I'd consider these relatively equal lows, but I definitely consider these relatively equal lows. This low on here is 33,921, and this low here is 33,936. So a difference of $15. So there's relatively equal lows there. However, well, this is the 1 hour. I was gonna say, however, I don't see, there is high volume in here to suggest, it's not that significant though, but to suggest that there might be trap traders. I'm sure there are, but they might have already gotten taken out. Trapped people going short, that is. Went short, market moved away from them. So just keep your head on a swivel. Be patient. We'll see where we go. Let me get rid of this. Get rid of this. Let me go back to Coinbase. Well, let me do Binance. See, we're flat on this one too. See, I do like, I kind of like seeing that. The fact that that's hit flat, because that creates us equal highs, which is also buy side liquidity. But equal highs and equal lows, you typically want to see within a range, or like within market structure. So like this is your move. Well, let me do this better. This is your move. So what will happen is you'll have equal lows, equal highs, and we're in the middle of a range. We've already topped, equal highs, equal lows, these two equal lows, these two equal highs. And what you'll often see is you'll see one side get taken out and then the other side get taken out right after that. Or you come down and then you come up. So you either bam, bam, take out short stops, buy stops, whatever you want to call them, buy stops, and then run down the bottom. Run these two down. An example is right here. Probably. I haven't looked at it. Let's see. Let's dig into this thing right here. 15-minute. Do we have equal highs? 5-minute and equal lows. Here's some equal lows right here. Equal highs. What does price do? Come up, come down, consolidate, break the low, equal lows, shift to the upside, take out the equal highs, build liquidity, shift to the upside, take out the consolidation range over here. Big vector candles. All of those get recovered. All of it gets recovered. But this is something that you can spot often, where big move down, manipulation move down. Actually, here's equal lows. equal highs. Right? So first, take out the highs, take out the consolidation range, take out these highs over here, shift down, take out these equal lows and this low, this consolidation range, take that out, shift to the upside. And because we have all this volume here, we have all these imbalances in here, we kind of get a big move out of there to take care of those imbalances. So it makes it price a lot easier to move through when you have so much volume in certain areas. Come up, volume dies off, and that's the end of your move. And on these moves, they typically come in threes. So you get the initial move off the bottom, and then you consolidate, and then you get a push up again, take out the next high, and then you consolidate, and then you move up to the top, and then it's done. Bye-bye to the downside. 1, 2, 3. 3 waves that all take out, that all take out a high. Well, first wave takes out this high. Second wave takes out that high. Third wave got exhausted at resistance. And we saw that with the volume that fell off. So if you know where you could possibly be within a cycle, you say, okay, we're coming off a bottom here. And we've got one wave come down. We've consolidated. Second wave up. And this is where, a lot of moves can be made, because if you've already seen this happen, you can almost always expect that one more push up. And that is where you can make a move. You see your divergence, you get out, and then you play the other side of the market. And then, yeah, that's about it. Well, I hope you found something in tonight's stream that could benefit you. Remember, stay focused or you'll get lost. Stay focused or you could get trapped. Focus on volume. Focus on market structure. Focus on your mental. Make sure you're all good up there in the head. Don't let emotions take over your moves. Pre-plan them out. Always learn more. Keep watching me, Alex. That's about all that I trade or trust right now. So, that I can think of. But yeah, hope you enjoyed it. Don't forget to follow Alex O'Crypto if you don't already. He is in my description. Join his Discord. Join my Discord. Link is also in the description. Hit that like button on your way out. Subscribe to the channel if you are new, please, and you enjoyed this content. I know you had to make it through the first 15 to 20 minutes of my my ramblings, of my admission of losing focus of what this is all about, which is helping others and being completely open. Like I said, I should have came to my Discord, shared the video with my people, with my community, and been like, hey, what do you guys think about this? Instead, I took it upon myself to try and I'm trying to think of the word, try to bring some professionalism to all this. It's like, Dude, you're a YouTuber. Calm down. You're a YouTuber, a trader, and a pool boy. Okay? That's what you are. But that's not all that you are. So, I do like to help people. I do like to teach people. And if I've helped you at all, I don't know. Leave a comment. Hit that like button. But that's going to be it for me tonight, guys. Thank you for watching. As always, thank you for your support. I love you so much. I will see you in the Otter Gang chat tomorrow. I love you all, or today, depending on when you're watching this, or yesterday, again, depending on when you're watching this. Yeah, I love you. Thank you all for watching. I'll see you next time. Peace.